Now, as noted, the mainland Chinese stock market formally entered a so-called correction yesterday after plunging more than 4.6% that day for 10% in total. Stephen Engel in Beijing has more on that. Steve.
Yeah, Paul, a trigger yesterday was when the Commerce Ministry came out and said that 4 trillion yuan in stimulus spending simply cannot completely offset falling export demand. We all kind of knew that, of course, but when the government comes out and says it, maybe investors realizing the recovery of the economy isn't necessarily as solid as they had expected. Also this week, of course, we got those eco numbers, industrial production, fixed asset urban investment, while still surging, did not meet economists' forecasts in July. The pace of expansion of the Chinese economy seems to be waning just a bit. Here's how the markets are faring today. Okay, they are up slightly, about 0.5% for the Shanghai comp and the Shenzhen comp. Checking the blue chips, these are the most heavily weighted stocks in the Shanghai Composite Index. Banks and energy companies are the most heavily weighted stocks in the index. And we're seeing PetroChina, ICBC, Sinopec, BOC, and China Life. They are all rising. PetroChina alone makes up nearly 14% of the Shanghai Composite Index, nearly double that of number 2, ICBC. The benchmark Shanghai Composite Index, Paul, as you mentioned, fell 4.7% yesterday to a 4-week low. The index, if not including today, has fallen 5 out of the past 6 sessions, losing 10% since reaching a 15-month high on August 4th. Banks are beginning to rein in lending to avert asset price bubbles forming and a rise in non-performing loans. China's new loans plunging to less than a quarter of the advances we saw in June. That could hurt property stocks.
The prices are much ahead of a fundamental, and given that Chinese, if there's an overheating economy, that's the first sector they might actually try to do some macro adjustment. So I would actually try to avoid that a little bit until the price drop back down a little bit. Then I will go in again.
In the opening minutes, we are seeing some gains in the big A-share property stocks: China Vanke, Gemdale, also Shanghai Liujiazui, which it builds in the main business center over on the Pudong in Shanghai. The only one of these down Beijing Capital Land. Okay, well, they're flipping around. You can tell pretty much flat for the day. Shenyang Wangguo Securities, Paul, yesterday in a note saying that investors should sell China's stocks as the market is in their estimation, quote, bubble territory, and share prices already reflect expectations for a rebound in the economy and earnings. Paul?
Yeah, Steve, I can tell you that the market's softening up already. Shanghai comp now up less than 0.2% after opening 0.5% higher. And in today's market, where most markets are up about 1%, that's pretty weak. Steve, thank you very much indeed for that. Stephen Engel there in Beijing.